The Central Bank of Nigeria held a number of OMO auctions, and also coming on the back of the previous week when the Debt Management Office held a bond auction. But we've seen investors' appetites kind of mixed. Talk to us about what's going on in that segment of the market. It's a holiday, and maybe the phone lines are refusing to work as well. But last week, the Nigeria Treasury bills market remained pressured amid tight liquidity condition, with average yield rising by about 55 basis points to 18.12%. There was mostly sell-offs across the short end of the curve. And, well, this week the Central Bank of Nigeria is expected to hold an auction and sell about 167.52 billion naira across the 91, 182 and 364-day papers. But let's talk to Robert now. We've been able to establish connection with him. Robert, it's great to have you on the program.
Thank you, Ari. Good morning.
Good morning. So talk to us about what's going on with investors. Taking a look at analysis from most of capital market firms, you notice that there was tight liquidity from most segments of the market, but investors' appetites continued to be quite strong around Treasury bills.
Yes. What we've noticed in the market in a couple of weeks back now is investors' appetite shifting more towards the fixed income securities and more aggressively towards the short-term, short-tenured instruments. As you would recall, we saw that last week, following CBN's intervention in the forex market, we saw a lot of liquidity mop-ups in the system, to the point that the aggregate system liquidity was seen to be negative. Of course, this is in line with central banks' effort to ensure that they mop up as much liquidity in the system in order not to pressure the foreign exchange market. But on the fixed income end, we saw massive sell-off across both bond instruments and, if you like, the treasury bills instrument. And this is likely linked to the fact that investors are pricing a lot of risk within the system. Of important note was the inflation figure, which came in last week, and we still saw a lot of pressure, especially on the month-to-month basis. We saw that the pressure between February and March has really not subsided, as we saw month-to-month rising by about 1.7%. So inflation came in at 17.3% for the month of March. So we saw this massive sell-off in the bonds market, particularly when you compare less than 2 years time to maturity within the bonds market. We saw that yields rose as high as 19.2% on the average, compared to 17.6% in the previous week. Of course, from 2 year time to maturity upward, we also saw yields rising as high as 16% on the average, relative to 15.8% in the previous week. On the whole, average yield rose by about if you check on the average, we saw about 50 basis point rise in yield, because we saw yields rising from 15.8% to about 16.2% on the average. So generally speaking, investors are cautious, even playing within the fixed income end, because they are trying to see as much as possible how they can take advantage of short-term opportunities for their portfolio performance.
But then do you expect that cautiousness to still continue this week? Remember that the Central Bank of Nigeria is holding NTB auctions as well, about 167.52 billion naira across the 91, 182 and 364-day bills will be sold. Do you expect also cautious trading, or as usual, oversubscription?
Yes, as usual, investors are more likely going to tilt towards the short treasury bill instrument, like you noted. So this week we are going to see auction for the 91, 182 and 364 instrument. Our expectation is that most investors are going to pitch their tent towards the 364, most likely towards the 364-day instrument, because of the attractive yield it offers. Currently, in the secondary market, yields are trading as high as 22%. I'm talking about the yield to maturity on 364-day instrument. Of course, the discount yield is still high as 18.5%. That is also attractive for any investor who wants to play. But the major challenge for Treasury bill auction this week might be that the system liquidity, because as of last week, I think towards the close of last week, system liquidity was negative. But because, of course, there will be some maturity also on that same day that the Treasury bill instruments are going to be auctioned, we expect that largely the auctions will be successful with investors playing more towards the 364-day instrument.
So for the bond market, are you expecting it to be quiet this week?
Well, I think the auction for the week is also going to affect the likely performance of the bonds market. The reason is because already if you check along the yield curve, for instruments that are trading at 2-year term to maturity and above, investors are not too keen about locking in their funds for a longer time when you could take advantage of very short-term instruments. So some of them less than 1 year term to maturity and are offering as high as 20% yield to maturity. So for the the bonds market this week, they're not expecting any major performance, particularly that there will be an auction for the Treasury bill from the Treasury bill end of the market. So we expect that the bonds market will be mostly quiet for the week.
All right, Robert, thank you so much for joining us on the program today and sharing your perspectives with us. It's still a holiday, so you've got about 24 hours or so to enjoy yourself before you're back to work. Robert Omotunde is the head of research at AfriInvest, joins us there to share his perspectives on the state of the fixed income segment of the market. Remember, the Central Bank of Nigeria will auction about 167.52 billion naira in 91, 184 and 364-day bills, and he's expecting investors to tilt towards this 364-day bill because of the attractiveness of the yield at 22%. Business Morning continues after now. Stay with us.